Vizsla Silver Corp has emerged as one of the most significant development stage companies in the precious metals sector. Headquartered in Vancouver, British Columbia, and listed on both the New York Stock Exchange American and the Toronto Stock Exchange, the company is focused on the rapid advancement of its flagship Panuco silver-gold project in Sinaloa, Mexico. The Panuco project is not merely an exploration venture, but a district-scale consolidation of a high-grade, past-producing mining region that benefits from substantial historical infrastructure and modern discovery success. This analysis provides an evaluation of the company's technical, financial, and geopolitical standing, as well as the underlying market dynamics that define its investment potential as it moves toward a construction decision and anticipated production in 2027. The investment thesis for Vizsla Silver is built upon three primary pillars: the exceptional grade and scale of the Panuco resource, the robust economics of the 2025 feasibility study, and a sophisticated capital structure that significantly de-risks the transition from developer to producer. Unlike many junior mining companies that face extreme dilution or prohibitive debt costs, Vizsla has utilized a multi-billion-dollar district-scale asset to secure flexible, low-cost financing that supports an aggressive dual-track strategy of mine development and continued exploration.
The company's focus on the Panuco-San Dimas corridor, a geological trend with a history of massive silver and gold output, provides a foundation for high-margin production that is projected to sit in the bottom quartile of the global cost curve. Geological context and the potential of the Panuco district. The Panuco silver-gold project occupies a 7,189.5-hectare land package in southern Sinaloa, approximately 45 minutes from the city of Mazatlan. The region is a classic example of an intermediate to low sulfidation epithermal system, which is the hallmark of the major silver districts found throughout the Sierra Madre Occidental. These deposits are typically related to siliceous volcanism and crustal extension that occurred during the Oligocene and Miocene epochs, with mineralization hosted primarily in continental volcanic rocks of the Tarahumara Formation. What distinguishes Panuco from many other Mexican districts is the sheer density and extent of its vein systems. The property contains over 86 kilometers of known total vein extent, much of which was only sporadically mined or explored using modern techniques before Vizsla consolidated the district. The consolidation of the district allowed Vizsla's technical team, led by VP of Exploration Dr. Jesus Velador, to apply systematic, district-scale mapping, geophysics, and drilling to identify extensions and new high-grade targets. This effort culminated in a series of significant discoveries, most notably the Copala and Napoleon vein systems, which now form the core of the project's mineral reserves. The Copala deposit in particular has emerged as a standout discovery, characterized by wide, high-grade mineralization that remains open for expansion.
As of the January 2025 resource update, the company reported a combined measured and indicated mineral resource of 222.4 million ounces of silver equivalent, AgEq, with an additional 138.7 million ounces in the inferred category. The quality of this resource is underscored by the average grade of 534 grams per ton GT silver equivalent in the measured and indicated category, making it one of the highest-grade undeveloped silver resources in the world. The geological continuity of the district was further enhanced by the strategic acquisition of claims from Fresnillo plc in December 2025. This transaction involved the acquisition of 10 titled mining claims, totaling 2,378 hectares, many of which are adjacent to the existing Panuco project and cover known extensions of veins like La Luisa and Cruz Negra. The significance of this acquisition cannot be overstated for long-term investors, as it removes artificial property boundaries that previously limited the ability to follow high-grade veins at depth or along strike. By controlling the extensions of these systems, Vizsla can optimize underground mine designs and amortize its planned infrastructure costs over a potentially much larger resource base. Technical engineering and the 2025 feasibility study. The most significant recent development for Vizsla Silver was the completion and filing of its National Instrument 43-101 Feasibility Study, FS, in late 2025. This study, which carries an effective date of November 4, 2025, represents the definitive technical roadmap for the project's development. The FS was prepared by Alcenco Engineering Canada, a firm with extensive global experience in building silver and gold mines, and it provides a level of engineering detail that significantly reduces the project's execution risk. The 2025 feasibility study outlines a high-margin operation with an initial 9.4-year mine life, producing an average of 17.4 million ounces of silver equivalent annually. During the first 5 years of operation, production is expected to peak at over 20 million ounces of AgEq per year, driven by the extraction of high-grade material from the Copala and the Polian deposits. The economic metrics of the study are truly exceptional, with a base case after-tax net present value, NPV, at a 5% discount rate of US $1.802 billion and an internal rate of return, IRR, of 111%. These figures were calculated using a silver price of US $35.50 per ounce and a gold price of US $3,100 per ounce, reflecting the strong upward trend in precious metals prices seen throughout 2025.
The mine plan is centered on two contiguous underground mines, the Copala mine and the Napoleon mine, which will be operated by contractors using ramp access. The chosen mining methods, long hole stopping and drift and fill, are well suited to the geometry of the Panuco veins and allow for efficient extraction with minimal dilution. The processing facility is designed to handle 3,300 tons per day, TPD, for the first 3 years before expanding to 4,000 TPD in the fourth year. This phased approach allows the company to minimize initial capital expenditure while retaining the ability to increase throughput once the operation is cash flow positive. The processing circuit itself will utilize a conventional 3-stage crushing and grinding system, followed by leaching and a Merrill-Crowe circuit to produce silver-gold doré bars on site. Producing doré bars rather than a concentrate allows Vizsla to capture more value by avoiding the high treatment and refining charges often associated with selling concentrates to third-party smelters. The project's cost structure is another major advantage. The all-in sustaining cost, AISC, is estimated at US $10.61 per ounce of silver equivalent over the life of the mine, which positions Panuco as a bottom quartile producer on the global silver cost curve. The initial capital expenditure, CapEx, required to bring the project into production is relatively modest at US $173 million, a figure that is largely supported by the district's existing roads, power lines, and historical mine infrastructure. The combination of high grades, low operating costs, and manageable capital requirements results in a payback period of only 7 months, which is virtually unprecedented for a mining project of this scale. Financial strength and the US $300 million convertible note. Perhaps the most sophisticated aspect of Vizsla Silver's development is its approach to project financing. In November 2025, the company announced the closing of a US $300 million offering of 5% convertible senior unsecured notes due in 2031. This financing represents a strategic evolution in the junior mining space, moving away from high-interest project debt that often comes with restrictive covenants and milestone-based drawdowns. The US $300 million raised provides the company with immediate liquidity, covering the US $173 million initial capex requirements, while leaving a significant surplus for exploration and corporate purposes. The terms of the convertible notes are particularly favorable to the company and its shareholders. The 5% coupon is roughly half the interest rate typically seen in traditional project finance facilities for similar assets. To protect existing shareholders from potential dilution, Vizsla also entered into cash-settled capped call transactions with a strike price of US $5.84 and a cap price of US $10.5075 per share. This mechanism effectively raises the conversion premium for the debt and allows the company to capture the upside of its stock price appreciation while minimizing the number of shares that might eventually be issued. By drawing the full proceeds of the offering immediately, Vizsla is also able to earn interest on its cash holdings, which management expects will initially offset the interest payments on the notes. The company's balance sheet as it heads into the construction phase is exceptionally robust. As of early 2025, prior to the convertible offering, the company held over $92 million in cash and zero debt. By late 2025, following multiple successful financings and the convertible note issuance, the company's cash holdings were estimated to be approximately twice the capital required to reach production. This financial flexibility allows Vizsla to maintain its aggressive exploration program across the district without being forced to return to the equity markets at inopportune times. It also gives the company the freedom to pursue further strategic growth through acquisitions or other corporate initiatives that were not permissible under previous debt mandates.
Regulatory environment and mining law evolution in Mexico. Investors in Mexican mining projects must carefully consider the shifting regulatory and political landscape.
In 2025, the implementation of new mining law regulations introduced a fundamental transformation in how the country manages its mineral resources. The most significant shift is the departure from the historical first-come, first-served allocation model for mineral concessions, replaced by a system of competitive bidding for all new concession allocations. While this change increases the barrier to entry for new explorers, it can also enhance the value of existing large-scale concession packages like those held by Vizsla Silver, which are grandfathered into the previous system's secure tenure rights. The new legal framework also includes a revised tax and royalty regime. Mining companies in Mexico are now subject to a base royalty rate of 8.5% on earnings before taxes, interest, depreciation, and amortization, EBITDA, as well as an additional 1% precious metals premium on gold and silver gross revenues. While these rates represent an increase in the tax burden, they remain competitive within the global context, positioning Mexico in the middle range of global mining jurisdictions, higher than some net smelter return models, but below the sliding scales used in countries like Peru.
On the administrative side, there are encouraging signs of permit acceleration under the administration of President Claudia Sheinbaum. The government has targeted a reduction in average permit processing times from the previous 12 to 24 months down to a 6 to 12-month window. Minister of Economy Marcelo Ebrard has stated that permit acceleration is a national priority linked to securing supply chains for critical and precious minerals. For Vizsla Silver, the permitting process is already well advanced. The company submitted its Environmental Impact Assessment, EIA, in February 2025 and is tracking towards a construction decision in the second quarter of 2026. The security situation in Sinaloa, while requiring constant monitoring, appears manageable for large-scale industrial operators. In April 2025, Vizsla proactively paused fieldwork for approximately 1 month as a precautionary measure due to regional security conditions. This voluntary pause demonstrated management's commitment to employee safety over short-term milestones. Operations resumed in early May 2025 after conditions normalized, and the company reported that the pause had no material impact on the project budget or the overall development schedule. The project's proximity to Mazatlan, a major city with significant government presence and logistics infrastructure, further supports the company's ability to operate safely in the region.
The Vizsla Royalties spin-off and shareholder value. In mid-2024, Vizsla Silver executed a strategic move to unlock additional value for its shareholders by spinning out its royalty assets into a new entity, Vizsla Royalties Corp. VROY. Shareholders of record in June 2024 received 1/3 of a common share and 1/3 of a purchase warrant of Vizsla Royalties for every Vizsla Silver share held. This spinoff allowed the market to value the company's high-margin royalty on the Panuco project as a separate investment vehicle, distinct from the capital-intensive development work of the parent company. Following the spinoff, Vizsla Royalties Corp was listed on the TSX Venture Exchange. As of late 2025, the company had a market capitalization of approximately CA $295 million and was trading at CA $4.40 per share. Vizsla Silver maintains a significant ownership interest of approximately 41 to 55% in the royalty company, providing it with a valuable strategic equity asset that could be monetized in the future to fund development or other growth initiatives. The royalty spinoff effectively gave Vizsla Silver shareholders a free option on the long-term production of the district, and the subsequent growth in VROY's stock price has added another layer of return to the original investment.
Management, performance, and execution history. The leadership team at Vizsla Silver is led by Michael Connard, a mining entrepreneur with over 15 years of experience in capital markets and project development. Since founding the company and initiating the consolidation of the Panuco district in 2017, Connard has led Vizsla through multiple high-grade discoveries and several oversubscribed financings. His background as a co-founder of Inventa Capital, a natural resource incubator that has raised over $800 million, provides him with deep connections within the institutional investment community. Supporting the technical side of the business is COO Simon Kermlek, a senior engineer with over 30 years of global mining experience. Kermlek's previous role as COO of Ausenco is particularly relevant, as it ensures a seamless transition from the engineering phases of the feasibility study to the actual construction and operation of the mine. The management team and board of directors have an average tenure of approximately 4 years, suggesting a stable leadership group that has seen the project through its most critical stages of growth. Insider alignment is strong, with Connard and other directors holding significant personal stakes in the company, further ensuring that their interests are aligned with those of the broader shareholder base.
Market dynamics. Silver structural re-rating.
The timing of Vizsla Silver's development coincides with a major fundamental shift in the silver market. Throughout 2025, silver recorded a persistent supply deficit driven by below-trend mine production and surging industrial demand. Silver is unique among precious metals in that more than 50% of its annual demand comes from industrial applications. The growth of the solar energy industry has been a particularly powerful driver, as silver is a key component in photovoltaic paste used to conduct electricity on solar cells. Similarly, the shift to electric vehicles, EVs, uses significantly more silver than internal combustion engine vehicles due to the increased electrical requirements of EV power systems and charging infrastructure. On the supply side, the silver market is increasingly constrained. Approximately 72% of global silver is produced as a byproduct of lead, zinc, copper, and gold mines. This means that the supply of silver is relatively inelastic. It does not necessarily increase just because silver prices are high, as the primary drivers are the markets for the base metals. Primary silver projects like Panuco are rare and highly sought after by investors because they offer the most direct exposure to silver price movements. In December 2025, silver reached multi-decade highs above US $30 per ounce, and many market analysts forecast that the metal could trade between US $70 and US $100 per ounce throughout 2026 as supply deficits persist and physical inventories are depleted.
Cash flow analysis and production growth projections. The financial profile of Vizsla Silver is currently characterized by the typical negative cash flows associated with the heavy investment and development phase of a pre-production mining company. As of late 2025, the company reported a trailing 12-month free cash flow of negative $45 million. However, this position is set to transform dramatically as the company transitions toward its targeted first silver production in the second half of 2027. Projected growth in cash flow is expected to be aggressive and front-loaded. According to analyst forecasts, the company's EBITDA is projected to shift from a CA $20.1 million loss in the fiscal year ending April 2027 to a positive CA $384.3 million in April 2028, representing the first full year of ramp-up. Cash flow generation is expected to peak shortly thereafter, with projected EBITDA reaching CA $785.7 million by April 2029, as the mine hits full production capacity and processes higher-grade material from the Copala deposit. Long-term projections suggest the project is capable of sustaining significant returns, with free cash flow estimated to reach CA $466.9 million annually by 2035.
The internal economics of the project allow for rapid capital recovery, with the 7-month payback period ensuring that the operation becomes an internally generated funding source for further district-scale exploration and potential development of a Project 2 shortly after commissioning. The growth trajectory is further bolstered by the production profile, which averages 20.1 million ounces of silver equivalent in the first 5 years, before settling into a life-of-mine average of 17.4 million ounces. This high-margin, early-stage cash flow is a critical component of the company's regenerative mining strategy, as it provides the capital necessary to fund environmental and social initiatives without further equity dilution. Valuation analysis and future growth catalysts. From a valuation perspective, Vizsla Silver is frequently viewed by analysts as a high-growth asset with significant upside. As of December 2025, the company's market capitalization was approximately US $1.98 billion, with the stock trading near all-time highs for the year. Despite this performance, several analysts maintain buy or outperform ratings, citing the strength of the feasibility study and the potential for resource expansion across the district. Price targets from firms like Roth Capital and Cantor Fitzgerald range from US $6 to US $7, reflecting confidence in the company's ability to execute its production plan.
Investment momentum for Vizsla has also been supported by its inclusion in major precious metals indices. In October 2024, the company was added to the GDXJ, VanEck Junior Gold Miners ETF, which provided a significant boost to liquidity and attracted a new wave of institutional capital. The company's graduation to the main board of the Toronto Stock Exchange in November 2024 further broadened its investor base and improved access to capital markets. Looking forward, the next 18 to 24 months are expected to be catalyst-rich for the company. Key milestones include the receipt of final environmental and operating permits from the Mexican government anticipated throughout early 2026, A formal construction decision for Panuco Project 1, expected in mid-2026 following the completion of detailed engineering. Continued news flow from exploration drilling across the district, particularly from high-priority targets on the newly acquired Fresnillo claims. The potential discovery of Project 2 as the company continues to test regional targets south of the main Panuco area, such as the Santa Fe property. The commencement of full-scale mine construction and the anticipated first silver production in the second half of 2027.
Sensitivity and risk mitigation strategies. The Panuco project exhibits economic resilience. According to the feasibility study, the project's NPV and IRR remain positive even under extreme stress tests, such as a 50% reduction in metal prices from the base case. Furthermore, the project's economics are highly leveraged to any further increases in silver and gold prices. A US $1 increase in the price of silver adds approximately US $33 million to the project's NPV, and a 25% increase in the silver price could improve the IRR by as much as 29 percentage points. To mitigate operational risks, the company has implemented several key strategies. The use of a contractor-operated model for the initial mining phase allows Vizsla to leverage the expertise and equipment of experienced Mexican mining contractors, reducing the need for upfront capital and specialized in-house labor during the startup period. The ongoing underground development of the test mine provides the company with actual performance data on ground conditions and mining productivity, which has been used to further refine the feasibility study assumptions and build confidence in the project's delivery.
Financing risk has been largely neutralized by the US $300 million convertible note, which provides a significant capital cushion above the initial $173 million capex requirement. This allows the company to handle potential cost overruns or delays without the immediate need to return to the market for additional equity. The inclusion of the capped call transaction further protects the share structure, ensuring that the company's capital allocation remains focused on maximizing per-share value for existing owners. Comprehensive outlook. Vizsla Silver Corporation stands at a pivotal junction in its corporate evolution. It has navigated the high-risk exploration phase to prove up one of the most attractive high-grade silver districts in the world. The transition from developer to producer is supported by a technical study that demonstrates world-class economics, a capital structure that is fully funded and protected from excessive dilution, and a management team with a proven track record of execution.
For investors, Vizsla offers a liquid, pure-play entry into a high-grade silver producer in a jurisdiction with a long and stable history of mining. The company's district-scale consolidation strategy and its alignment with global ESG standards through regenerative mining make it a prime candidate for long-term thematic portfolios focused on the energy transition and resource security. For retail investors, the company provides the potential for significant valuation re-rating as it achieves its first production and transitions into a cash flow-generating entity. The additional value provided by the royalty spinoff, VROY, further enhances the total return profile of the investment. While risks such as regional security, regulatory shifts in Mexico, and commodity price volatility remain, they are countered by the project's exceptional grade profile, its location in an established mining corridor, and a management team that has demonstrated a high degree of proactive risk management. As silver continues to re-rate as a critical industrial metal in the mid to late 2020s, Vizsla Silver is well positioned to become a leading primary silver producer and a cornerstone of the global silver mining sector. The combination of a world-class asset, a robust financial foundation, and a district-scale exploration pipeline makes Vizsla Silver a compelling investment case.